as I was saying just a moment ago, Safaricom, the big one to be watching this week with its earnings report being released tomorrow. What are your broad expectations there, and what specifically will you be watching out for?
Good morning, Alishia. Thank you for having me on today. Safaricom is an interesting stock, and looking at the company itself, it has faced quite a big hit ever since Zain launched their all-time reduced tariffs. And now we also have Bharti launching as Bharti in Kenya. That should be in a couple of weeks' time. So I think Safaricom are on a tight spot. But all the same, we must remember this competition came about 2-3 months ago. So maybe this may not really be factored into their books for their half year. We may actually see this factored in much later. All the same, I also think there's a lot the Safaricom has to bring to the fore in terms of their money transfer service, the M-Pesa. We also have their mobile banking. We also have their data services and the acquisitions of these smaller data farms. So looking at the results tomorrow, I think they'll be positive, and I don't think we'll see anything that would discourage any investor.
Do you think that, even if these results come in better than expected, even because its engagement in price wouldn't be reflected in these numbers, as you've just stated, the market would be hesitant about future prospects?
I think it's a time which there's a lot of reshaping, and I think Safaricom is trying to change its strategy. It's trying to move from dependency on voice, which is actually 80% of its revenue. And this is where it got the greatest hit in terms of competition. They're moving more into data, and they're moving into mobile banking and mobile money transfer. And I think this will be their cash cow. Looking at also the stocks, I don't think that there'll be any cause for panic. I think this might actually be a boost for them. I think things will pan out well for them.
They've made mention of being able to take health and education cell phone services to the masses. Just like M-Pesa brought financial services to the poor, it's looking like this is going to be the next growth leg. I mean, what exactly are we looking at here? And bottom line, is it looking viable at this stage?
Yes, it is very viable, and also looking at the age we are in, there's a lot of growth in the ICT sector. There's a lot of growth in technology, and there's a lot of exposure. And I think this campaign will be, it's well timed, and I think it's going to be really fruitful. What we must remember also is that Safaricom has a wide network. Its marketing network is pretty good, and I think it has a potent leader, and I think we should see this work out well for the company.
Well, competitive landscape in mind, we've got new CEO Bob Collymore already having identified areas that need urgent fixing. Network and customer care services seem to be top of the agenda, and then they've got a reprioritization of their investments to expand 3G coverage as well. This while reducing their operating expenses. This is a pretty fine balancing act that they've got to play here. What are you making of the firm's ability to actually walk this tightrope?
It's a tightrope, it's a gamble, but with any business comes risks, and I think this is a risk Safaricom have to take. They have no choice at this point in time. They're losing a lot in terms of their market share when it comes to voice, so they have to be more creative, and I think the new director appreciates this. And also looking at the rate of return on what they want to do, it may actually pan out in the long term. So they may have some teething problems in the beginning, but looking at the rate of return, probably in a few months' time, it should actually cover up for this. And if there are any operating expenses which may hurt the company, this will also be recovered over a short-term period. So
Safaricom right now being smacked down from 6 shillings, would you be a buyer?
Yes, by all means. This price at 4 shillings, 75 cents, that is actually a giveaway. I mean, I don't see it going below that price. And I'm looking tomorrow, I think it may actually go above that.
Well, we'll be keeping a key eye out for developments on that front. In the meantime, very quick look at Mumias Sugar. It's been slumping back of late after having traded at a 15 shilling 50 high on the 5th of August. It's now retreated 29% from that high mark, despite raw sugar prices having climbed. They're sitting now at 30-year highs. Why the divergence in trend when it comes to Mumias and the way it's performing against that raw sugar price right now?
That's an interesting. Mumias seems always to be to produce a funny kind of supply-demand curve. It also moves quite a number of volumes, and I think that should be taken into consideration when looking at the share price. Trading at around 10 shillings, 20 cents, I think that's really cheap. It's really discounted considering it's a trading come dividend of 40 cents. And also looking at their core area of business, as you mentioned earlier, there's no reason why the company should not be doing well because sugar prices have gone up internationally. But we must remember that they are facing an imminent deadline for the COMESA and opening up of the sugar market regionally. This is actually what I believe is causing the drawback from most investors and maybe is causing the dip in the share price.